Hello, everyone, and happy Sunday. Simon here with AvaTrade, and we will be going through our weekly trading plan for the upcoming week. I want to welcome everybody, our returning visitors. Welcome back, and for those of you who are new, I just want to spend a minute explaining what we do here. And I like to say the same thing all the time. You plan your trade, and then you trade your plan. You have better chances succeeding this way. And the format of this webinar is very simple. We're going through some fundamental and the big picture things. We're going through a little bit of economic calendar, what's happening and what's upcoming in the week ahead of us. And then we're going to a trading platform and looking through possible scenarios there. Before we go any further, I'd like, as usually, to read a risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work or whether you can afford to take high risk of losing your money. And you can find a full disclosure statement at avatrade.com official website. This is the agenda. It's a usual agenda. It might be in a different order, but what we do, as I said, we go to fundamentals, economic calendar, then pay attention to indices, Forex, commodities, and stocks. And I'd like to start with this slide that I prepared. And for those of you that are coming every week, you know that I've been talking about something that's happening every year as Wall Street is actually trying to bring the prices of the stocks in general equities to the high. So everybody on Wall Street will be happy on their returns and especially for the bonuses. And we spoke in the past few weeks. We spoke about the yields for the treasury bonds, and I mentioned how possibly they're going to be holding it low into the new year because that's the only thing that was holding the market from, I don't want to say crashing, but selling off. And they really succeeded. On the January 1st, the treasuries were closed, but equities were trading. So take a look what happened as we're coming back to the full power trading on the 3rd of January. Excuse me, we went about 1.5, 1.6. Next day we broke 1.7. Then we played around it, and on the last day of the week, on Friday, I think we almost hit 1.8. We closed at 176.90. So that's of course it went together with following the markets. We'll be looking at it in a moment, but I'd like to really bring your attention to these things. Like again, I don't want to say bad things about people on Wall Street, but the big money, the big pockets, the big players, they are ruling the markets. And once again, our job, you and mine, you small retail traders, we're here just to try to really analyze as much as we can. We will never know what's really going on inside, but we'll try to figure out which way we're going and try to really jump and catch a little bit of a piece of the action. And that's our job, actually. So I just wanted to bring it up to you and just show you how they succeeded to artificially keep it low. And then the moment the year finished, the books are closed. The new year shows that the market went lower, the bonds yields went higher. And of course, NFPs, we'll talk about it in a moment. So here's the big picture. This is the results of NFPs for this for December, and the news came out on Friday. And we'll see in a moment how different instruments reacted to this news. That's also important to understand. So the expectation were the 400 jobs will be added. Only half of it was 199 jobs added. The good thing is this is the unemployment rate. The previous one was 4.2, the expected is 4.1, and the surprise will be below 4, 3.9. So President Biden, those of you who had the chance to listen to it, he really got so excited about it that this is the best unemployment level in the first year of the presidency in the past 50 years. He takes all the credit. I'm not going to be judgmental here, but I better say nothing. And 3.9% unemployment means, as we spoke a few times already, that the Feds are waiting for the unemployment to get to the level of pre-pandemic, and this is why the market reacted the way it reacted. And we'll see in a moment what happened. The good unemployment or better unemployment level generally would be good, but in this case, as we're already waiting for the Feds to start increasing the interest rate, this is going to accelerate possibly it. And we will know, very important, this Tuesday, we have testimony of Powell in front of the Congress. So we'll know more about it, and most likely this number will be very significant in what they had to say as far as the future monetary policy and so on. So this is what happened on Friday, and this is the NFP. Now, the upcoming week, there's a lot of announcements. I just brought the most important ones. So on Tuesday, we have the retail sales from Australia and the trade balance from Australia. Of course, it's going to be affecting the index and the currency. And that's what I was talking about. The Fed chair, Powell, testifies on Tuesday as well. Then on Wednesday, we have inflation data from China, and we have inflation data from US. Very, very important. So the unemployment together with inflation, that's what the driving force in the Fed's decision on increasing and how fast to increase the interest rates. And on Friday, we have very important retail sales. These are the retail sales for December that covers Christmas, New Year's, and so on. These are the most important retail sales of the year. And we have the Michigan consumer sentiment on Friday. So these are the upcoming things. I suggest that you check economic calendar by yourself before the week start and mark whatever is relevant for the market that you're trading. For instance, if you're trading euro dollar, and any European and US news are important. If you're trading any other currencies or instruments of a specific country, that you want to see the announcement from those countries. And let's move now to the MT4. This is the MT4 platform. We'll be going through certain markets. And as I mentioned, I want to start with the Friday NFPs. And just for those of you who are new, I just want to really show something important. I'm going to switch to the bar chart for the purpose of the color. So you see, because I've driven the vertical line and the time of the announcements at 1:30 GMT. For the NFPs. And let's take a look what happened. And also important for those of you that just beginning to trade, very important to understand the volatility at the announcements. NFP is the most volatile announcement, I would say, of the month, and usually happens the first Friday of the month. And take a look, the first hour, it's the first half an hour is really choppy. We open here, I don't know where we went, you can zoom into a smaller time frame and see it, but usually it's very choppy here. Some traders like to trade it using the limit orders, getting in and out on limit orders. Some people just like to use market entries, getting in and out. But what my point, what I'm trying to get across is, if you're not sure what's happening, if you don't have a specific plan, let the dust settle. Let's see what happens. Because take a look, 1, 2, 3, 4, 2 hours. We were pretty much in this within the initial bar, which was large. The high of it was 4,700, the low was 4,670. That's 30 points. That's about 0.3% of the volume. And after settling down, we broke down below the low of this initial 30 minutes. And then we went back in and so on, and we closed below there. So that's on S&Ps. Dow Jones, similar story. it went the opposite way. It broke out. So one of the ways of trading is really waiting which way we're going to break the initial 15 or 30-minute bar, and that's one of the things to do. Again, I'm not suggesting it, but if you look at the chart, everything happened after a very choppy few 30-minute bars before we broke out of it. The same thing happened, and this is the euro dollar. Take a look what happened. The direction picked up a little bit sooner. So the second bar closed above, and from here we went higher. If you take British pound, similar idea, it took 3 bars to close above it. So this is the initial announcement. 1 bar up, second bar up, we still didn't close, and here we closed higher. From here we moved nicely to the upside. That's the pound. Australian dollar, same thing, and so on. So what's the upcoming week's going to bring us? So I think it's very important announcement on Tuesday, which will bring a little bit more clarity, because that's a very serious testifying going on in front of the U.S. Congress by Mr. Powell, and that will bring some more details and questions asked and answers followed and so on. That's very, very important. And until that, let's switch to a daily chart, and I'm going to switch to a setup with moving averages set. So let's take a look on the big picture. This is a daily chart, and S&P 500, after testing the 50-day moving average, we did close below it. So last time we went to test the 100. So it is a possibility that we slide lower and test the 100 moving average and see how strong that is. Over here, take a look. We tested it a few times. We never closed below, and that's why we moved higher, made a new high. So here, if we are starting the week to the downside, this would be our destination as far as testing the next moving average. This is a classical technical analysis that a lot of analysts are using. So this is the S&Ps. Dow Jones looks much stronger here. It's far away even from 50 moving average. So if it decides to move lower, so the 50 moving average would be the point of testing to begin with. Nasdaq is the weakest one. Take a look. We broke in the past 3 days. We broke the 50 and we broke 100. We're trading between 100 and 200 moving average on Nasdaq. You will see in a moment what tech stocks really sold out, including the big names and very stable stocks. They sold heavily on Friday. So these are the indices. Let's take a look at Europeans. We start with DAX. DAX is holding. It had a spike lower. We retested around 15,850 and bounced back. So it is holding. We are far from 50 moving average. Again, if the U.S. market continues pulling in, this would follow, and the first step would be the 50 moving average here. FTSE looks very strong. We are actually testing the highs. Let's take a look. We are on the way to retest the highs, and I don't know why such strength there. I didn't see any specific positive things coming, so we'll be following, and we'll see if FTSE will follow to the downside after the U.S. market falling on Friday. This is the Nifty. We spoke about it as it went higher, that correction. We are trading about all the averages. Let's see what happens the upcoming week. And Nikkei had a very strong move down from 29,000, 29,295 to 28, almost 1,000 points. We recovered a little bit. Let's take a look at the weekly chart. On the weekly chart, we are trading below 50 moving average. So there's a big chance of continuation to the downside. We tried to break out of it. We never closed above. So again, if US markets continue lower, this will follow. And logically speaking, we might see a Monday continuation to the downside as the Asian market closes earlier. So in continuation on the US and NFP reaction, we might see continuation to the downside on Nikkei. Okay, that's it with indices. Again, we might continue lower. We might stop for a moment and get more details on Tuesday on testifying of Powell. We don't know what's going to happen. We'll take one day at the time. So let's move to commodities and take a look at oil. Oil Thursday was a very strong day on oil, and Friday, after spiking higher, we actually went lower. And again, I want to show you reaction of oil on NFPs. Bring again the 30-minute chart. Let's take a look. This is the announcement, and then we went lower. The moment we broke the initial 30 minutes, we went lower, and this is this is the level that was set up of level of resistance. Then we closed here on Thursday, giving us a hope of continuation to the upside, and now we're back into below this level of 79.22. So potentially we could see continuation to the downside on crude oil. Natural gas did the opposite. It actually moved higher. And as we spoke about it, that we are within this range between 4 and 3.5. And we retested it a few times, and now we're on the way higher, potentially going to retest 4. And if we pass that test, we potentially could move higher. Natural gas, considering as everything sold out on Friday, went higher. There's a strength and the buyers on natural gas. So potentially, again, everything is potential. We never know what's going to happen, but potentially we could continue to the upside. Let's take a look what we do as far as averages. Here we go. So we are kind of playing with the 200 moving average on natural gas. All we need to see is the closure about it. We did try a few times, but we went straight back. And potentially we need to see a closure about 4 and a potential move higher to retest maybe the next level. Next average is actually 50 is lower than 100, which is very bearish, and it caused by this move. So again, we're in the range between 3.5 and 4, and the longer we stay here, the stronger will be the move. It could be to the upside, it could be to the downside. We'll see what happens there. Now gold, I want to also bring the gold at the time of the announcement to show you the volatility. Take a look at the move. Initial move, this is not gold, apologize. Here we go. So take a look at the spike on gold. Again, the range 1796, 1782, 16 points, about a percent, right? 0.8%. So we took all the stops to the downside. We took all the stops to the upside. We closed right in the middle. That's interesting. You see how choppy could things become during NFPs, and there's a reason I'm sharing this with you, especially for the new traders. Don't get caught in these things, because it's very exciting. And of course, like I said, some like to put limit orders at certain levels to catch these moves and then get out on limit orders as well. If you could do that, but that takes a little bit more experience. So if you are new, try to stay safe, because then you probably get hit on both sides, and then we just sit there and think, what just hit me, without understanding what's happening. So that's NFP for you. All right. So after all this choppy moves, we are trading about the initial high of the announcement. So potentially we are. Let's take a look at the moving average. We are sitting on a 200 moving average here. No, actually, no. This is a 100 moving average. So the 100 moving average we are holding here. Potentially we could move higher. Over here, it's very tricky. We have a crossing of 50 and 100. That doesn't look super great on the classical analysis. Again, it's not 100% accurate, but officially the 50 moving average is lower than the 100. That would show a selling signal. So that's also a possibility. So let's see how we start the week, where we're going to go. So far, Friday was an up day after the Thursday sell-off. We are sitting on the daily 100 moving average. we're sitting there. So it's very serious area there. And as far as commodities, I want to bring to your attention the soft commodities. There are a few articles that I suggest you look up for. Some predicting this year are good for commodities because the energy prices are high, and they're expecting that the farmers will actually raise the prices for the products and so on. So let's take a look at the wheat. It's been holding this 760 area with the spike below. We are above all the averages, and after holding here for a while, take a look. This level is really 1 and 2 and 3 4 5 testing. We dip below it. If we climbing up about 760 again and building some positive price action here, we might see a move higher on this product, on the wheat. And corn is also looking strong. We have it trading about all the averages, and it is holding strong without selling. Here we had a few attempts to break through, and we did, and now we're looking strong for continuation possible to the upside. Soybeans even stronger. Let's take a look on the soybeans. After struggling selling, we confirmed the double bottom here. Then we made high low. Here we had the hard time breaking 1270, and the moment we did, it was a very nice move, a nice profit taking and continuation to the upside. So out of softy, soybeans look very nice, and it could be they're right, predicting this year good for commodities, and we'll be watching that. Okay, let's move on. We'll move to dollar index and the Forex world. So dollar index. We spoke about dollar index, how we held 96 for a while, and then Friday, I just want to show you again what happened in dollar index on the announcement, so we understand. Here we go. We had a big spike both ways. Next move down, and then we closed below and continuing lower, and we closed at the low. We closed at 95.71. Big picture here, 95.52 is the next level of support. That's where all this bar ended up holding, and then this is something that we'll be watching. Now, as far as the indicators, it's been holding a 50 moving average strongly. So unless we start closing below it, we shouldn't worry much to the downside. But if we do, that it opens a possibility or potential possibility to retesting the next moving average, which is 100. We'll be watching that. So with that, it makes sense. If dollar went lower, so we'll just look really quickly at the majors. Euro dollar reacted, of course. We closed above, so it opens a possibility to move higher. British pound, very strong. We are actually above 100 on the way to possibly. Australian dollar tried, didn't do much. We're still below the 50 moving average here. And I just want to bring up. I did it a few times when the market was falling. Potentially, yen could get some strength, and it actually did on this move. Dollar yen is very tricky here. Take a look. We are back to exactly to this point over here. High over here was 115.51. We closed here at 115.54. We're 3 pips away from this level over here from which was sold out. So very tricky. 115.50. If we start closing below, it could mean that yen will continue getting strong and dollar yen would sell off a little bit over here. And I have a collection here of the crosses to do with Japanese yen. And again, to explain, if market chooses to continue lower, which there's a possibility there, and it might increase actually with testifying of Powell on Tuesday. So Australian dollar, Japanese yen, take a look. It had a sell-off. It didn't do much, pretty much flat day on Friday. Potential to move lower. There was not a rebound from this recent sell-off. Euro, JPY was stronger on Friday. Euro was strong in general. NZD JPY also similar to Australian. It went lower and tried to bounce, didn't succeed much. Canadian JPY moved higher a little bit on the oil prices. GBP JPY also was a strong sell-off day before. On Friday, we tried to rebound, and Swiss franc also pretty much flat after sell-off. So again, on the big picture, should the market start or continue selling off, the yen would see some inflow of capital into it, and the pairs against the yen would really look weak. So something to pay attention to. Again, to remind you why yen, there's certain instruments that consider to be safe haven. Japanese yen, Swiss franc, and gold. It's a classical scenario when the risk off is happening. That means that the money, the stock market, equity market is selling, that the money flows into gold, yen, and Swiss franc usually. Yen has been a strong indicator so far of that. So we'll be watching all the Forex pairs that trade against the yen. One more thing I just wanted to bring, I missed it, copper. We spoke about copper. We said potential sell-off from this area, and it did for 2 days. And Friday, for some reason, it went higher. It bounced off the indices, so something to watch as well. We'll be watching the news from China. We'll be watching in general what the market is doing, and something to pay attention to. Let's move to individual stocks, and we'll take a look why Nasdaq again. I want to bring the Nasdaq again. Nasdaq was the weakest out of 3 U.S. indices. Again, that's S&P, Dow Jones, and Nasdaq was the weakest. And we'll try to understand what happens. Take a look. Amazon starts selling even before big stocks. Cisco actually had a positive 2 days there. Facebook, Tesla sold from 1200 area 1, 2, 3, 4 days. Tesla, as we know, it's a high capitalization there and affects the index very strongly. So take a look. Tesla, by the way, fundamentally, 2 things that I found out about Tesla. One, they opening soon the Austin plant, and there's a lot of excitement about it. A lot of cars will be coming from there, and the self-driving business is striving, even though it's more expensive, but a lot of attention being paid to the self-driving business of Tesla. And take a look. Technically speaking, we are below 50 moving average. We held the previous day's low, though, even though the market sold out. So it's very interesting what's going to be next. We might slide lower and retest the psychological 1,000 level. Before that, it's hard to predict anything there. Apple, that's what probably draw the S&P, the Nasdaq down as well. Apple, after recently reaching the 3 trillion mark, it sold out in the past couple of days, and it really didn't look so great on the Nasdaq. Microsoft, very strong stock for a while. We had a little bit of choppiness here, and then after we failed to break through the 345, 350 area, was a sell-off, and we are trading below 100 moving average. So all the big names are pretty much in red. Netflix, I remember telling you about Netflix as we entered. I shared with you that we closed the week, the previous week, we closed around 600, and I said if we break below 600 we're going to sell off, and it was a very nice play here. Take a look. The moment we start closing below 600, we went as slow as we closed at 641, so it's a nice move. And I wonder what's going to be next for Netflix. We are trading below all the 3 major moving averages. It was really intense selling going on, so we'll be watching it. Now let's take a look at the 3 banking stocks, the ones that we always mention, and let's see what happens there. As we mentioned, they said that the next year with interest rate increase would be good for banking, and look what happened. After this a little correction, we continue higher, all of them. Citigroup, this is really recent. Take a look. In a matter of 2 weeks, we went from 60 to 65, $66 on Citigroup. Goldman Sachs also had a nice recovery after confirming the 50 moving average was holding, and JP Morgan as well. As the market was selling, these stocks went higher very strongly. So it's a nice rebound on financials. Now, Pfizer is not doing much. You came to retest this level right here around 55.5. As we mentioned, the pill was approved by FDA. A lot of positive news coming out, but we did have a little bit of a sell-off here. Friday was an up day, so if we are holding about 55.50, there is a chance of continuation to retest the highs on Pfizer. Now, a few stocks that I mentioned to you that were recommended by Barron's for the upcoming year, and that's the Amazon. As we said, has been selling. AT&T has been very strong recently. We went from 22 to 26, almost $27. GM had a nice move as well, and the recent days we sold. We took a little bit of a profits here. And Johnson & Johnson's very strong, also recommended by Barron's. And take a look, we had a nice move, a nice correction, and breaking through the previous high. It looks very good to the upside. So again, a big picture, we'll see what the equity markets are doing. We'll see what the outlook is for the interest rate, and we'll have more of a clarity of that on Tuesday with the testimony of Powell. And I want to finish this with looking at cryptos. This is Bitcoin. It's been selling off. It's been sitting below the 200 moving average, and the past few days it's accelerated to move lower. And this is the level here around 40, around between 40,000, 41,000. Actually, this low over here was 40,724. That's where the recent move high happened. So we're sitting right in that territory. So let's say 40 psychological level is something to watch. Here, the spike was 39,500. And from here, we held around 40 and then we moved higher. So a lot of disappointed traders here, or investors probably, hoping that we're going higher again. We've seen bouncing from 30 and going to 69. Everything is possible. But as of now, we're playing around 40,000. And Ethereum, similar idea. It looks simply really weak here. We're trading around 3,000, 3,041. That's it pretty much. Just to summarize it, what we spoke about, I'm going to also bring this here for your information where you can follow us and get in touch with us. So just to summarize, we had NFPs. There were less jobs created, but unemployment level improved significantly. And that potentially could mean or will mean that the Feds will increase the interest rates sooner than expected. And by the way, some analysts actually had a survey, and then the chances grew to 68% that March will be the first time of increase of interest rates. So the market reacted to it. There was a sell-off in the market. Dollar got a little bit weak. The yields on 10-year bonds increased significantly, about 1.7. We went almost to 1.8, currently 1.76. The closure was, I think. So the whole focus is what's next, how the market will take it, how the stocks are possibly going to sell off, and where's the money going to. Gold is in focus, US dollar is in focus, Japanese yen is in focus. High oil prices could cause the soft commodity prices go higher this year, and that's also in focus. Okay, let's see. We're not gonna guess. We'll just follow the rules. We'll follow the plan, and we'll see what the upcoming week will bring. And I want to wish everyone a great weekend and a successful upcoming week, and all the best. See you all next week.